Hey everyone, it's Elise. Welcome back to my channel. And last year in 2021, I was thinking about getting a 401k loan. So real quick, I'm going to talk specifically about what a 401k loan is and what it is not as well. 401ks are what we have in America as employees to save for our retirement. It is a before tax deferred retirement plan. Keyword in that is tax deferred. The government wants us to defer from using it. So they make it hard for us to take the money out. It's not like that we're going to be able to take the money, get away with tax-free money, and then we're just going to be able to go about our days. Absolutely not. Uncle Sam will not allow that. So if you do take your money out, you can. It's called a hardship withdrawal. You can also do a 401k loan, which we're going to get to in a few minutes. But if you don't do it the loan way and you just take that money out, you are going to incur penalties. It's very rare that you will not incur penalties, but there are a few ways. One of them being you have to be deemed totally and permanently disabled, and you have to show government qualifications that you meet that criteria. You can be divorced recently, and that qualifies under being penalty fee because it makes sense when spouses are separating, and especially if one was like a homemaker and they weren't able to work throughout the decades, they need some retirement money. So that money and the person who has a 401k, that money will be separated and will go to the other persons for them to be able to retire. And then the other reason, or another reason, is that if you have extremely high medical expenses, and I don't even want to think about how you would have to qualify that, but unfortunately or fortunately, if you really want to take money out of your 401k, you can do that for those three reasons that I mentioned and maybe a few more without penalties. Anything else, it's a penalty. The penalty is you pay a 10% penalty fee on that, as well as you pay the taxes on whatever that balance was. Two things that are not a lot of fun, but again, the government does this to defer people from taking advantage of having tax-free money. Some other reasons that you can get what you call a hardship withdrawal, which is a withdrawal. It's not like the 401k loan, which you will eventually put back. Withdrawal means that it is gone. There's no more opportunity for that to go to your retirement, and you've lost out on the time that you were doing it for however many years you did it before you took it out. Those reasons include like if you're getting evicted or foreclosed upon, but you have to be in the last part of that, like maybe a week or two before the sheriff is showing up out your door telling you need to leave. Another reason is if you have funeral costs for a child, a spouse, or a parent. If you're buying your first home, that's all. But again, it is a withdrawal. That money is not going back to your retirement, and you lost out on time because I'm sure you started however many years before. You don't get that time back. So that's unfortunate. So it shouldn't be taken lightly, especially if your goal is to have a few $1 million, which is everybody's goal in their retirement years. So that leads me to what a 401k loan is. So the loan is specifically a loan, and it is made available to us if we really need it. A lot of people do it for many reasons, like fixing up their home, which is what I was initially thinking about doing it for. But I've decided I'm just going to save the money because as we talk about the loan, there's an opportunity cost. But you do have the access. The maximum that you can get with, regardless of if you have $1 million, is $50,000. So if I have $100,000, I can only take $50,000. If I have $2 million in there, I can only take $50,000. So that can be a good or bad thing, but it is available if you want it. You do have to pay it back. They give you 5 years, and that money is taken out of your paycheck. So it's not like there's a trust system. There's no trust system. They don't trust you. It's coming out your paycheck every week. And then if you do take the loan and you happen to have to leave your job, or unfortunately if you are fired, that loan is due right away. So that's another thing that made me think about not doing it, because I knew in 2021 that I was going to quit my job this year, 2022, and I did not want to take out a loan and be tempted to not be able to quit my job. So it was more about freedom for me, and that's what a lot of debt is. Like, debt is the opposite of freedom. You are stuck. A mortgage is you are stuck for 30 years. So I had to weigh the scale, and I decided I'd rather just save the money than to have the money right away and have to stay at this job that I really don't want to stay at. So that is what the 401k loan is in a nutshell. It is money that you take out, but it can go back in and it can help you immediately in your bad financial situation and help you later in your retirement. So specifically when we talk about the pros and the cons, the pro is that you can put the money back. But the con is there are opportunity costs, because that 50,000 for some people could mean a couple $100,000 or even $1 million down the line. So that is something to think about. Another pro is that it's helpful for you in a personal situation where you need the money. And it requires you not to have to ask a bank, because you're paying yourself interest. You don't have to pay interest to a bank. So that's helpful. That's a pro to it. And we work hard. So it's nice to be able to have something to show up, especially if we know we're going to make good on it. It requires us a little bit of independence of having to ask a bank or family members for money. You can just do it yourself, especially if you really like your job and you're not concerned about quitting. But the con is you can't quit your job. And that's just a fact of the 401k loan. If you know that you're going to quit within those 5 years, or there's a high chance that you will not be there, then this is not the option for you. But if you love your job and you plan on being there for 20, 30 years, it's possibly a viable option that allows you a little bit more independence. Another pro is that you're paying your interest to yourself and not a bank. But the cons are that, again, it's a $50,000 limit. So it's not like it's free, unlimited money that is available to you. You do have to pay it back within 5 years. And if you quit that job, you can't pay it back right away. Like, let's say your balance is $15,000, you can't pay it back right away. You will be liable very soon for the 10% penalty and paying the taxes on whatever was the amount that you took out. So that is a 401k loan in a nutshell. It ended up not being right for me, but if I loved my job and I was going to be there forever, it could be a plan. And then I could take some money out, fix up my house, and sell it a little bit quicker than I want to. But that's not going to happen right now. When I am self-employed, I do plan on getting a retirement plan for like self-employed people, entrepreneurs, and then I will still have that option. So I might do it then, because I plan on being self-employed for many years. And maybe I'll use it then, but it didn't work out for me. However, that doesn't mean it won't work out for you. Drop down in the comments if you've done a 401k loan, if you've had a good experience or a bad experience. Do you think it's a good idea? Do you think there are other ways to get money that may be more advantageous, particularly in this climate of 2023? Or do you just think saving the old-fashioned, putting your head down, saving the money, do what you got to do to meet your financial goals so you can pay stuff off, which requires more time and not the convenience of a loan? Anywho, thank y'all so much for watching. I'll be back soon. And until next time, take care.